Is the real estate profession over as we know it? I don't think it'll ever be the same as in the last couple of years. It's certainly going to be different as a result of the new Trust in Real Estate Services Act, which I'm going to cover. If the real estate profession does die, which it could in the next couple of decades, it will likely happen as a result of AI, innovation, unaffordability, and consumers finally pushing back against the industry. I can't see it happening just as a result of policy like this. And when we talk about people pushing back in the industry, that is happening in a big way in the US and Canada through lawsuits. And today I'm going to talk about that. And I'm going to answer a couple of questions that you might have about the future of real estate and what we could expect for the coming decade. I think the name of this act, Trust in Real Estate Services, says it all about its objective in changing the perception that we're starting to see changing around real estate. And one of the big issues with the industry is the lack of trust and the difficulty that we have as a profession in managing public sentiment around the role and the reputation of real estate professionals. And if you could do me a favor, like this video if you think that the real estate profession will basically be gone in 20 years. Do you think that AI could replace realtors within the next 10 or 20 years? Answer in the comments. I look forward to having that discussion with you. Okay, so let's get to it. I mentioned in the previous slide affordability, and one of the things that this is a tweet I put out earlier this year. It said realtors should stop pushing for house prices to go up unless they all want to become rental agents. Unaffordability reduces homeownership. Low homeownership economies see reduced property transaction. This is why volume was crushed for the last 12 months. And if you look at comparable markets in the Western world, such as Switzerland would be a good example, you don't see a ton of real estate changing hands. You've really got to a more stabilized housing model where people stay in their houses for a long time. And the primary tenure or type of home occupancy is through rental. And Canada's homeownership rate is in decline. It has been in decline on a pretty strong downtrend, and we're seeing more and more policy aimed at creating more and more rental housing in the Canadian economy as a solution to the housing crisis. So I really don't see the homeownership rate in Canada increasing anytime soon, and this could really present a headwind for the real estate profession moving forward. Beyond us potentially hitting a record low number in the number of homes sold per capita in Canada in 2023. I don't think we'll ever see a number this low. We've seen the same number of sales as we saw in 2001. 67,000 homes sold, worth about $251,000 at that period of time. So this is about $17 billion in total dollar volume of home sales. This would have given out, if you were to run the math at a 5% commission, this would have given out about $850 million worth of commissions. But there were less than 20,000 realtors at that time. So this would work out like 56,000 in commission potential per realtor. In 2023, let's say we finish the year with the same number of sales, because that's what we're on track to do according to this tweet here. Let's say we finish with the same number with an average house price of around $1 million. For ease of math, it's almost $68 billion in sales volume, which gives out around $3.4 billion in commissions to realtors. So you think, wow, the total commission environment has grown so much in that period of time. But now we have 70,000 realtors. In fact, the GTA has the most realtors per capita in the world. Something like 1 in 100 people is directly involved in the real estate profession in the GTA. So even though that's almost 4 times the total dollar volume and total commission potential, the earning potential of a realtor dropped from $56,000 in 2001 to $48,000 this year based on those assumptions, because we have 70,000 realtors today, actually 73,000, and we had less than 20,000 realtors during that period of time. And so this is where policy is starting to change around the real estate space to make it better for the end users. So the Trust in Real Estate Services Act is really actually just an amendment to the existing act, renamed Real Estate and Business Brokers Act through an amendment, changing it to Trust in Real Estate Services Act. And then they've added a couple of components that are designed to help consumers. So the first one is changing the nature of multiple representation. This is where a realtor represents both the buyer and a seller in transaction. You know, some people argue that is potential for conflict of interest in these scenarios. And they've wanted to make it so if you have two agents in the same office, you could designate one to a buyer and one to a seller. The clients belong to those individuals, not to the entire brokerage. Seems pretty reasonable. I think a lot of people, when they saw changes happening to the multiple representation space in the Ontario real estate as a result of this policy, probably thought we were going to head in the direction of Vancouver or BC, where they actually fully banned dual agency or multiple representation, where you can represent a buyer and a seller as one agent. And that took place in 2018. The other introduction is self-represented party, or an SRP. And so an SRP can receive general information from a realtor. So this basically gets rid of some of the confusion around whether or not someone's a customer or a client. So you hear a lot of people approaching realtors and wanting to represent themselves and get a discount on commission. And they've really carved out room in this act to make clear definitions on what that would look like. And this is where I really think, these lawsuits that I mentioned at the beginning of this video are coming into play. So you're hearing a lot about this potential for a race to the bottom in commissions and the ability for buyers to buy without an agent, because home sellers are basically suing on a state-by-state basis and winning, by the way, in these massive class action lawsuits. In Illinois, home sellers won a $1.8 billion lawsuit after the jury found that there was conspiracy among realtors to fix the buyer commissions in the real estate transaction. And sellers felt basically they were forced to pay excessive fees to real estate professionals, and they sued and they won. And a similar lawsuit like this has taken place in the Canadian market, with a class action lawsuit reaching the next level of the courts on behalf of sellers against the real estate boards and a couple of different real estate brokerages for the same thing. It's almost a piggybacking on this lawsuit. So worth paying attention to what happens in that space and whether or not the Canadian versus US justice system's interpretation of price fixing and conspiracy and anti-competitive behavior is the same. The next piece is the ability for sellers to request open bidding. And there's a variety of different ways they can do it. They can basically do it at any point during the transaction. They can disclose the contents of the offer halfway through the bidding process. And this isn't new in Canada. CREA, the Canadian Real Estate Association, tested a pilot program allowing potential home buyers to see real-time bids. The question is whether or not this will actually have a material impact on housing affordability in Canada. I think the jury's still out on that one. If you really wanted to dive into it, you would look at auction theory. There's some papers from a guy named Jonathan Levitt at Stanford, and it's basically game theory, and he talks about open auctions versus sealed bid auctions. They're applying a game theory perspective to house prices. So in an open auction or an English auction, bidders would openly compete, revealing bids gradually. The challenge in this is you're a buyer and you're looking at a house for, let's say, $1 million, and now all of a sudden you see somebody else has bid it up by $5,000. If somebody else is willing to pay $5,000 more for a house than you are, now you have seen visually that that's the market value, because the market value of a property is whatever somebody is willing to pay for it. And so if you've established, I'm willing to overpay for this house by $5,000, I might as well just overbid what I now know is the market value by $5,000. Now the price is up $10,000. And if the other buyer has the same perspective as you and they say, I'm willing to overpay for this by $5,000, then that could keep bidding up the price. And so an open auction could have just as much of a negative impact as a closed auction. The challenge with a sealed bid auction is that you have this huge space of potential economic waste, where if you have two bidders, let's say house is $1 million, somebody bids $900,000 and somebody else bids $1.5 million, that person basically overpaid for the house by a substantial amount of money. And open bidding could potentially eliminate that economic waste. The reality is both of these auction types carry something called the winner's curse, which is the risk of overpaying. If you really want to get a good comparison as to what it would look like in an open bidding versus closed bidding scenario in a very comparable market, let's go way down south and take a look at Australia. Australia is a great comparison to Canada because we're both Commonwealth countries that came from the British monarchy originally. We both have comparable domestic currency valuation when compared to the US dollar. Both English-speaking countries, both very popular destinations for immigration, temporary workers, international students, and high population growth areas. Australia obviously has a little bit more of a compelling climate, but Canada does have that exposure to the US. And Australia, unlike Canada, has open bidding. So let's take a look at house prices in Australia during the same period of time that they've grown substantially in Canada. Nominal house prices in Australia are almost 4,600 times higher now than in Q1 of 1970. Comparably, in that same period of time, nominal house prices in Canada are about 2,500% higher. Now, that could be a disparity in inflation or the Australian versus Canadian dollar. So let's jump over to real house prices adjusted for inflation. So when we look at Australia and Canada, they're almost neck and neck, as you can see on this chart. Australia is actually a little bit lower, 315% higher real house prices than in Q1 of 1970, whereas Canada is 332% higher now than in Q1 of 1970. But Australia is only 25% overvalued against income, whereas Canada is 44% overvalued against income. And house prices in Australia are 47% overvalued against rent, whereas in Canada, they're 78% overvalued against rent. So I'm curious, give me your take in the comments. Do you think that open bidding or closed bidding is worse for creating housing affordability in either of these countries? So that's all I have for you today. I wanted to take a relatively high-level look at some of the changes coming to Ontario's real estate market to see the impacts that they could have on the realtor profession and the future of the real estate industry. I tried to draw in a couple of comparisons from different areas around the world, including lawsuits in the US and open bidding in Australia. I hope you found this informative. I would really appreciate it if you subscribe to the channel, like this video, and leave me a comment on a video idea or what you thought about this video. I love to have discussions in the comments, and I always look forward to doing that. Thanks a lot, and I'll see you next week.